good afternoon. You're watching Closing Trades right here on ET Now, and a little bit of consolidation but with a positive bias. So the ranged move continues since Friday, but at least we're slowly inching a little bit upwards. So pretty much around the highest point of the day, we're back at that 22,100 print, led actually by metals. So sectorally, that's the one pocket which has been leading the recovery today from the word go. Be it Tata Steel, SAIL, etc. They're all holding up well today. Jindal Steel as well added to that pack. In fact, Tata Steel is now touching a 5% gain mark on the futures. Jindal Steel holding higher by about 4.5%, and SAIL is higher almost by about 4% as we speak. Tata Power 3.25% of an uptick coming in, and BHEL as well is up about 4%. So it's really back to that entire capex infra theme in the market right now. Having said that, it's a bit of tug of war still. You've got the Adani names which are languishing today. Big boys like Infosys, Wipro, TechM as well continue to be under the weather. SBI is absolutely flat, and no participation per se coming in from the likes of an HDFC Bank, or for that matter an IndusInd Bank as well. So private banks, or rather large banks I should say, they continue to reel under pressure. Couple of stock specific news. Coforge, after that QIP approval coming in, that stock definitely has been on the radar. That stock on a tear this afternoon, or rather in the red, I stand corrected, 7% lower. The board has given an approval to about 3,200 crore rupees of a fundraise, and of course bunch of order wins for an SJVN, for a RailTel, for a KSB Palms, for an Ircon International. So all these stocks as well are in focus. So status quo, but a very critical week.
In fact, Aisha, you may have seen that in the last 10 minutes, Reliance Industries has actually pulled the market higher, trading at the highest point in the session right now, 1.5% higher, and that has actually helped the market also come off lows. You spoke about Adani Group. They're also off lows, but still under pressure. But metals clearly is the area to watch out for. Daljit Singh is here along with Nuresh and Kunal. Daljit, I'd like to take our discussion forward with metals. One section of the market believes that the US economy may not be doing that bad. The macro data from China is also supportive. So metals is the place to be. They're beaten down. And also, there is a view that if the slowdown actually continues in these two economies, this trade may be very short-lived, the metal long trade. Do you believe in this trade, or it is just a point A to point B and not worth really making it a large part of the portfolio yet?
Good afternoon, Ajay. See, we are right now very much overweight on metals. As of now, I think almost 8 to 10% of our portfolio is exposed to metals. And normally metals is a technical call. So metals is never a 3-year, 5-year lock-in story, that you buy it and forget about it. Your next generation will look at it like that. We don't buy metal stock like that, because there are so many things which work. There are so many moving parts there. Either it's global macros, it's local macros, then company-specific issues. So metals normally are a trading opportunity only. And we have also taken with that view. Right now, we believe that there is a lot of potential there, mainly because once that valuation-wise, they are not obscenely high. Second, the way the Indian government is putting focus on infrastructure development, and especially after the elections, we expect a lot more push coming on to the infrastructure. So the demand from our side will remain very strong, and currency, local as well as international, is in favor. So all these factors make a conducive environment for metal stocks, and therefore we are exposed to them.
Right. Kunal, I wanted to come and talk to you also about metals as well. These have been buzzing today as well. Kunal, in terms of metals, anything exciting that you're finding right now? Anywhere you see real value coming in for these metal stocks on the charts?
So on the index front perspective, first, the Nifty metal index has broken past above the 50 DMA. Now this is at a point when most of the indices are struggling below the respective short-term moving averages. So that's a very strong sign that we may probably be looking at a revival for the metal sector going forward, being one of the first ones as compared to even the other formidable sectors which have been correcting over the last 1 week or 2 weeks. Now the second interesting part is that which are the stocks which are leading from the front. So even if you do a dipstick analysis in terms of the stocks which have fallen down in the last 2 weeks by a margin of say 15 to 20% and 15% broadly, and then have corrected or come back towards the 5%, 10% retracement, which means correcting more than or completing more than 50% of the retracement. The likes of Tata Steel looks quite strong in that aspect. Jindal still has come back above that 800 levels, looks quite strong. So both these stocks are the more formidable ones. Then SAIL, I think, is the other stock which I think time and again has been taking very good support at the 120, 125 range. That stock has also made a very strong comeback. JSW Steel is trading above the 200 moving average. So there's a minor comeback, I would say, from JSW Steel also. But I believe the stronger ones are the likes of Tata Steel and JSPL.
Daljit, wanted to draw your attention to Reliance Industries because even in the recovery that played out post Wednesday, Reliance has had a big contribution. What do you think is fueling the move on Reliance?
I think this is the rotation towards large cap, basically. If you have to take out money out from, and there's so much of talk about froth being built up in various segments. So if the institutions are forced or they're just like made circumstances are making them that they have to get out of certain smaller mid and stocks, then where does that money go to? So the natural progression is that it has to go to some large cap, and within the large cap, probably Reliance is the first choice because it has not, it's not valuation wise not very costly. There are a lot of trigger points for the stock to perform. Or after quite a few months of consolidation, the stock had come out of that phase and started moving to the new highs. So normally, if people would want to go with a stronger stock at this when they're rotating out of some stocks, and especially locking out their profit from those stocks. So I think it's just that rotation which is happening. Trigger points for the stock for Reliance remain as it is. The new energy initiatives that they are taking. Of course, it is a 3-4 years kind of call. It's not immediate that the profitability will start flowing in. But these days, just an hint is enough. No, semiconductor stocks are trading at 100 multiple. So here, at least these guys are spending 75,000 crore on new energy. The market is willing to give them that benefit.
Reliance doesn't really capture much of the new energy business in its sum of parts yet. Maximum 150, 200 bucks. So not even 10%. But there's another space I'd like your opinion on is the capex kind of stocks, capital goods in particular. We were speaking with Chetan Aya of Morgan Stanley this afternoon, who's making a case that we are at the cusp of a start of a new capex cycle. The last one, which he saw between 2003 and 2007-8. This one is similar to that. Let's get an opinion and then we'll discuss stocks, how to play them.
When you're thinking about this cycle, the way to think about it is to compare the investment growth trend in this cycle versus 2003 to 7. So in 2003 to 7, we had seen investment to GDP go up from the trough of around 28% to the peak of 39% by F 2008, or call it calendar year 2007. And in this cycle, something similar is happening. So this is an important driver to growth. We've seen that initially it has been driven by within capex, by public capex picking up. And now we are seeing growth broadening out within investment to private investment picking up.
Mm-hmm. Right. So Daljit, how would you play the capex theme right now? What are your favorite capital goods stocks or engineering ones that you have in your portfolio?
So we are adding some of them. As of now, I don't think we have any capex stock right now. Infrastructure we have added 2-3 months back. Some road project companies and those we have added. But machinery or cap goods per se, now we are evaluating 3-4 ideas there. Basically, we tend to go to mid and the smaller ones instead of just going to the L&Ts of the world. And we try to find the niche areas. So I think there are a couple of ideas which we are working. Maybe in next 1 month or so, we'll be adding some.
Nuresh, would you like to suggest some capital goods strong counters which are looking good to you? Because this place has got corrected and then went sideways, now gradually coming back.
So I would go more on the mid cap and the small cap side, which is where we've seen strong volumes happen in the Triveni turbines or a TD Power, where consolidations have been good. So Triveni turbines hit a new all-time high, then consolidating around those levels and have shown relative strength. So in terms of capital goods, a lot of these ABB, Siemens have already gone up quite a bit. So the opportunities are there on the mid-cap side more. So I would be looking at a TD Power, Usha Martin, and say a Triveni turbine. So this basket looks interesting.
Triveni Turbine, Usha Martin, these are some of the stock ideas coming in on the charts, of course. We'll take a very quick break on that note. The recovery seems good in place, but let's see whether it can spread around to the rest of the market or not. For now, we're at the highest point in the day, led by Reliance and L&T.
Still in discussion with Kunal, Nuresh, along with Daljit. Look at the market. I want to talk about hospital stocks with you, Daljit. After that entire story of how the treatments would be regulated and it will be at par with the public sector hospitals, all of that, this entire space went through a correction, and rightly so. Some of them started trading at 60, 70 times 1 year forward, and still way off the mark from that, the recent peaks. Would you be comfortable in getting back in some of these hospital names?
I'm very bullish on the sector as such, because this is a place where we see a lot of potential for many, many years to go. No? By the nature itself, we have so much of population, penetration levels are so low, and there is huge scope for expansion for all these companies. Now, of course, you have to be mindful of valuation. Incidentally, in last 2-3 years, this sector has seen a lot of PE investments, a lot of private investments coming in, which have just inflated the valuation to a very large extent. So probably this Supreme Court ruling actually become a trigger point for people to take some profit out and bring back some sanity in the valuation. But I think still there are valuations are on the frothy side. So we will have to be very choosy amongst all these stocks. I'm very bullish, as I said, on the sector, but one has to be very choosy while selecting the stock, where at least some kind of valuation comfort would be there. Now, where will that come from? That will come from either the expansion plans that these companies have, and if somebody has land bank available, or somebody is doing tactical expansion like joint venture with some already existing hospital. So then, because 40 to 50% cost is the land cost. So if you can save on that, then your return ratios will be much better. So like that, if you can find some stocks where there is some potential like that, then probably one should look at it. But the sector has a lot more potential, no doubt about it.
Daljit, surprisingly, IT has made a comeback, and the market was, I guess, focusing all on the capex, the infra theme, the PSU pack. But that said, some of these stocks have not done bad. I mean, we all know Persistent, KPIT have been some of the great performers of the year gone by. TCS, etc., also scaling at their lifetime highs. Today may be a one-off day, but what's the take on IT?
So IT has become very kind of a mystery. So but someday you feel it's so good, the valuations are in your favor. Then if you take a top-down call, and if you hear all this recession looming large, problems at macro level all over the world, then you understand that probably there is not too much of scope for these guys. But somehow I think the stock valuations are also working in that fashion, that most of these stocks had come to a good valuation point, if not very attractive, but at least they are reasonable valuation. So if somebody has cash, instead of keeping cash, fund managers like us, if we would have cash, I would not want to keep it cash as such. No, instead I can use these large caps and the frontliners, and maybe then that will give you some kind of yield. No? So to that extent, we are using IT, but we are out of IT as of now, not too much. I think 1 or 2 stocks, that too very small portion, only as a proxy to cash.
What about private banks, Daljit? They haven't quite played out as one would have thought they would. I mean, yes, HDFC Bank is touted as the comfort trade right now, but even at 1450, it's not a whole lot up from its 52-week lows.
Sorry.
Daljit, the question is on private banks to you.
Sorry, I lost you in between. You were talking about HDFC Bank, but then I lost.
Sure, I'll repeat my question. Just wanted to know as to why, or rather how this was touted to be as one of the most, valuation comfort kind of ideas in the market, the large cap private banks in specific, but it hasn't quite played out to be that fantastical trade yet.
In simpler terms, I would say it is just testing the patience. Huh? So if you are really a long-term investor, this is the time for such kind of stocks, no? When you can accumulate them. Of course, we know that for HDFC Bank, it will take at least 1 year to come back to some proper shape because they've done a merger which is such a large merger. So obviously, all these ratios get haywire, and things will take their time. So for a small company to get merged into another company, it takes 1.5 year, 2 years. In this case, we are talking of a big behemoth. So I think it is just a matter of patience. It is just a matter of that conviction that ultimately at the end, the result will be in your favor. Now, if you're impatient and if you want to see the result every quarter or just 2 months down the line, when I buy after my buying immediately, I should see something there. That's not going to happen. So if one is of the very clear view that, yes, I'm accumulating with the view that after 1 year, 1.5 years, this will be a big thing, then one can look at this stock. As of now, we have not invested as a disclosure in HDFC Bank or any of these private banks right now because we are already very well invested in BFSI space as such. So there are 2, 3 NBFCs, there are 2, 3 PSU banks already there. One private bank is also there, smaller mid-cap private bank. So we don't have space for BFSI. That is why we have not just added. But yes, it is one of the potential candidate for addition at some point of time.
Okay, just quickly let's shift focus and talk about Shipping Corporation of India. Now, Shipping Corporation's demerged entity, that's Shipping Corporation of India Land and Assets, actually set to debut on the exchanges tomorrow. That's March of 19th. What more are the details? How is the value actually coming in there? Sharad is joining with us with those details. Sharad?
Well, recently, if you look at the value unlocking happening from the government companies, this is the second instance. The first one we did see BML Land Assets, which was also listed. Now, tomorrow is an important day for Shipping Corporation as their land and assets, the separate arm gets listed in the bourses. Now, do remember that's roughly 46 crore worth of shares, which is in focus. But the important thing is what would be the price of this, what's the price discovery coming in. On the date of spin up, as per our calculation, Shipping Corporation's price ex demerger that stood at roughly 121 rupees, while post demerger for Shipping Corporation the price stands at roughly 94 rupees. Now this is a theoretical price which has been calculated, and importantly for the demerged entity, which is the land and assets arm which would be in focus, the price is around 27 rupees. Now that's the base value expected as per the calculation. Of course, it includes a lot of non-core assets, especially situated in Mumbai, and also a transfer of surplus cash would be there of roughly 1000 crore odd rupees. Now the non-core assets, if you look at the asset size, it's roughly 14,423 crore rupees. And as per calculations, the book value that stands as roughly 310 rupees per share. But the important number which you should be focusing on for tomorrow on the list, it could be the value of the demerged entity, which is roughly at 27 rupees when it comes to the base value.
Right. All right. So that's there's a corporate action which is happening in Shipping Corporation. It will be interesting to see how the street actually values this demerged arm. A lot of big PSUs have actually fallen quite a lot. Talk about OMCs, some of the metal and mining PSUs, the renewable one, IRIDA, even NTPC Power Grid have come off their recent highs. Anything which interests you, Nuresh, out of the beaten down PSU stocks to get back into?
So out of the beaten down names, the list would be first to look out for the OMCs. If we see another 5-6% correction, they'll come to a very interesting retest price point. Multi-year high breakouts happen in that sector. So waiting it out, if they drift a little more lower, that would be one section. Second would be to look at, again, oil and gas, which is where ONGC, if it drops down to 240 to 250 band, that would be an interesting price point. Same way, 160, 170 for GAIL. So overall, looking out for oil and gas names in the PSU basket, that could be interesting in the current correction.
Oil and gas in the current PSU basket is what you would be looking at, Naresh. Kunal, I want to get your take on these other PSUs as well. Other than oil and gas, is there anything attractive that you would look at in terms of PSUs? Would you be looking at even any of the banks still in terms of the PSU banks that you would look at?
Yeah, PSU banks may be the preferred trade, maybe a better trade, but I think a preferred trade over here from the PSU pack should be the defense pack. I think the likes of HAL, BEL, they would still look very attractive, because these stocks have corrected, significantly less compared to many of the other peers. So what you would actually want is a better, beta for these stocks, and a much more stronger trend, which has been sustainable for these stocks over the last so many months as well as over the last many years. So I think that's a formidable sign for these names. PSU banking stocks are more high beta in nature. So, if the market was into a very strong uptrend, then these stocks would probably have started to trend up higher. We could have seen completion of breakouts for these names. But then in these kind of market scenarios, I would probably expect that these stocks broadly consolidate a bit more.
Right. Kunal, since we're on the subject, let's also have a chart check for HDFC Bank. I mean, it's slowly grinding upwards, but when do you see a meaningful move come by?
Well, that will come by maybe over the next couple of weeks for HDFC Bank. I would probably expect another 50 to 80 point jump on the stock. My expectation is that once the March expiry closes out for the stock, post that is where we would see a start of a fresh move of fresh expiry, because the move or the first leg of sell-off which started off for HDFC Bank was in the month of January, and I've seen this phenomena over the last so many years, that generally a sell-off or a sell-off or a correction into a trend lasts for 3 expiries. So we would probably complete the March expiry by the end of this month. I think post that is where I would expect a meaningful up move, a strong uptrend, a strong participation, which would come back to HDFC Bank.
Also pull up Coforge. Despite of a big pullback in the market, broader markets included, Coforge is just not, in fact, it's fresh lows, 9% lower. Daljit, have you looked at the news announcement from Coforge saying that they want to raise almost 3,200 crore via QIP? And this is not the today's fall alone. If you look at the last 1 month, from 7,000 upwards, the stock has been sliding lower. What is the fear or concern of the market in your view? Some of the end of the brokerages are saying that they may actually bite much more than they can chew via this QIP. That's the fear. But what did you read this entire thing or observe it?
I think they've gone a little bit more aggressive on fundraising. Market was expecting that they will do fundraising, but I think our analyst was expecting something like 1,100, 1,200 kind of number, but they have gone to 3,200. So that has raised the doubts in mind that either when you are flush with too much of money, either you overpay or you do a acquisition which is more than what you can digest. So all those, I think, doubts are coming right now, although management has been very good, fantastic. They have they have a very good track record. They've been delivering very well. So there is no cause of so much of worry. But I think it's just that the expectations were much lesser for fundraising. That's why the stock is correcting too much. At what time, price, the valuation, because we were not looking for adding it to our portfolio, so we didn't go to that depth that whether at what price will it become attractive for us. Because as I said, from the top-down approach, we have just taken the call that we are away from IT. So we have not gone to the extent of calculating that price where it will become very attractive to enter. But I think it's just that the doubt in the minds of investors right now. And this kind of fall is actually for somebody who's taking a call on IT. This is a good stock to look at.
Okay, thank you so much, Daljit, for joining in with us this afternoon on ET Now. But on that note, markets, when you look at it, yes, off the day's highest point, but nonetheless managing to hold on to the 22,000 mark. We'll slip it to a short break and we'll be coming back with more updates on the market. Welcome back. You're watching Closing Trades on ET Now, and let's actually go across to Asta to get in an exclusive that we have. And what we're learning from our sources that Indiabulls Real Estate will raise funds via preferential issue. What more details does she have? Asta is joining in with us. Asta, take it away.
Yeah, well, we have learned from our sources that India Bull Real Estate are raising funds via preferential issues. So the preferential issues are likely to be subscribed by Embassy Group, Bluestone and other clutch of investors as well. So the fund raised by the India Bulls Real Estate are supposed to be more than 5 to 600 crores. Also, the funds which are issued are happening to be largely around the current market price as well. Just to inform you all, merger of the Embassy Group and the India Bull Real Estates are pending for the approval in the NCLT Chandigarh bench as well. Also, Embassy Group currently owns 11.66% of India Bulls. Just to give the background of this news, in August 2020, Embassy Group entered a definite agreement to merge certain residential and commercial projects with India Bull, and the merger will be promoted by the Embassy Group. So this is the news we have got from our sources, that the India Bull Real Estates are raising funds by the preferential issuers, and the preferential issues are subscribed by Embassy Groups.
Right, okay, that's an important update coming in on what we're picking up from India Bulls Real Estate. In the meantime, Poonawalla FinCorp, there's been an appointment. Arvind Kapil has been appointed as the CEO and MD for the next 5 years term. In the meantime, a lot of corporate voices as well coming in on the sidelines of the Mahakumbh currently on in, or rather Startup Mahakumbh currently on in New Delhi. And we caught up with the InfoEdge founder, Sanjeev Bikhchandani, on his views on the startup ecosystem.
So I think governance is important. I think you cannot build a large sustainable company which is durable for a long time unless you're well governed. And governance, in my view, begins and ends inside the founder's head. I will be honest, I'll be clean, I will do the right thing, say the right thing, and be truthful and fair to everybody.
And do you think fintech is going to make a comeback, make a bounce back after everything that has gone with different sorts of players in the last few months?
It will certainly make a comeback. It's not gone anywhere. There are many, many fintech companies, and even Paytm should make a comeback.
And any last words which you have for the outlook for startups in 2024?
I think 2024, I think there'll be more funding than last year. There'll be a larger market than last year. The future is bright. Just hang on in there.
And lastly, one more point. When you talk about private-public partnership, where do you see that going, and how do you see India can be the topmost startup ecosystem, and from the third largest to the largest one in the world?
So I think the Startup Mahakumbh is a perfect example of private-public partnership. The idea came from the private sector. We went to the government and said, listen, we should have something like this. And the government said, hey, you do it, we'll support you. And that's what has happened.
So by when do you think India can be the largest startup ecosystem in the world?
You know, in some ways we already are. When you convert everything into dollars, the exchange rate is a disadvantage. But otherwise, if you look at number of founders, number of companies, I think pretty much we are the buzziest startup ecosystem.
And is the startup ecosystem for sure the driver for India to reach the 5 trillion economy?
So actually 3 days ago or 4 days ago, McKinsey in collaboration with CII released a report about which there was a discussion here also, which called Unicorn 2.0. And that report said that in the last 10 years, roughly 13 to 15% of India's GDP growth has come from the startup ecosystem. In my view, that's a conservative estimate. And this number is likely to go up as we go along.
Right. I just want to bring up the stock price of Poonawalla FinCorp because it's important info actually coming on your screens. Not just the fact that Arvind Kapil has been appointed as the CEO and MD for the next 5 years term, but it's important to address who Arvind Kapil actually is. And he currently, in fact, serves as HDFC Bank's group head and is currently overseeing the mortgage banking business. So in that sense, for Poonawalla FinCorp, this is a very marquee appointment that has been made, and you can see the stock price as well rejoice this particular appointment right now. He continues, of course, to remain non-executive director on the board. That's the previous MD CEO. But let's also try and understand what's happening in the market. While, of course, the large caps are lifting the move up for the Nifty, what about the volume buzzers? Ansh is here with some of the price volume breakouts.
Right, so we'll start with one of the top lifter, that's Tata Steel. There's a news on bond sale as well. But sticking to technicals, as you can see in the chart as well, stock seems to be taking good support at the upward sloping support trend line, snapping its 5-session losing streak, along with good volume of around 2.5 times more than its 20-session average volume. So the bounce indicates good participation in the coming sessions as well. Apart from this, Coforge will also be in focus as the stock has slipped below its 100 DMA level, touching 3-month low level on intraday basis as well, along with good volumes of over 3 times its average trading volume of last 20 sessions. Also, the stock has registered its biggest single session decline in over a year. Lastly, Spark will be in focus as the Spark will be in focus as stock seems to be taking good support at the horizontal support trend line. Also, the stock has formed a bullish engulfing candlestick pattern, which usually indicates a potential reversal in trend on upside. So keep an eye on the stocks.
So much for that. We're keeping an eye out on all the stocks. But let's also bring on board Gurmeet Chadha, Managing Partner and Fund Manager at Complete Circle Consultants, joining in with us. Gurmeet, very good afternoon. Thank you so much as always for joining in with us. I want to start by talking today about, let's talk about chemicals, right? No one talks about this sector a lot more now. But do you think that, the fall that we've seen coming in all these chemical names, now for Vinati Organics, today we did have the news flow coming in around the import on a ban on those anti-dumping duties actually coming in, which supports them in a better way. Do you think now these chemical stocks, the sector as a whole, could see a turnaround actually coming in a slow and steady way?
I think business performance-wise, you probably will have another quarter or two. I think most of the inventory destocking has happened. It is a very cyclical sector for most chemicals, except for few certain chemistries. And there is a China factor of China dumping. And I think in few spaces you will find government intervention as well. But I also think that the bad news is in the price in most such names. We saw Aarti, moving up and when post earnings came in last month in February. I think you got to be selective here. I think you can also look at agrochemicals with now election season coming. So we are looking at something like Tata Chemicals. We are also tracking something like Apotex with marquee promoters, which is the former Asian Paints promoter family. And we are also looking at some more names in this space. So you got to be selective. If you have a little patience for a quarter or two, there could be better risk reward. But I would not say just play the entire sector in entirety. I think that may not be a good call. Play it chemistry wise. It is a very technical sector, and it may sense to be a little counter cyclical in this space.
Okay, well, the one pocket which is holding out very well in the market, although, by the way, the market has given up its little bit of a perk up that we saw. It's actually, some of these stocks which are completely cooling off. So, an ITC, Ultratech Cement, and TCS is actually the big laggard in the fall. That's completely turned around in the last few odd minutes or so. It's currently sharply lower. It's down by about 1.6%. But the metal space, which is still holding out, Ashesha, why is the entire sector buzzing?
Well, yes, Nifty Metal Impact Index is the biggest sectoral gainer in today's trading session, up nearly 2.5%. One of the reasons, of course, is the fall in iron ore prices. It has now fallen below that $100 per ton mark. We have some important macro data that will be coming in today evening, and it is expected to be on the weaker side, because of which iron ore prices have been falling for the last several trading sessions. We have an interesting note that has come in from JP Morgan this morning. First up, they've spoken about NMDC, where they say that NMDC's iron ore prices are expected to see a sharp cut in April this year, and that is because one, of course, is the fall in iron ore prices globally, and secondly because NMDC's fine prices now trade at a 40% premium as compared to export parity, and hence they expect significant reduction in iron ore prices from NMDC. They also say that falling raw material costs should benefit players the likes of JSW Steel. Benefit of lower raw material prices will be impact on other integrated players like Tata Steel and SAIL, but it is expected to be higher for non-integrated players like JSW Steel. They say Tata Steel and SAIL will have captive iron ore mines, and hence the benefit will be limited, and they do not rule out downward pressure on steel prices. Any positive impact on margins will likely come in only in the first half of FY25. Usually companies have some inventory of raw material, and hence the benefit of raw material decline gets passed on only with a lag, and hence benefit is expected to come come in the second half of FY25. They are advocating buying JSW Steel and Tata Steel on dips, and they believe that the medium-term story continues to remain intact for the steel sector. So one, of course, is the fall in iron ore prices, and on the back of this positive report that has come in, we are seeing several steel players gaining in trade today.
Okay, thank you so much for that. Surely keeping an eye out on all these names today, right? Tata Steel, JSW Steel, JSPL, all of them are buzzing away in trade. And Gurmeet, I want your view also on the metal pack. And, how do you see yourself playing this story as well? Obviously right now iron ore prices are falling. Benefits will start coming in from FY25, second half of the year is what we are understanding as well. So, how do you plan to play out this sector? Would you be looking at any of these names?
It's part of a satellite portfolio, which is tactical side. We're not really, you can't hold metal stocks for very long term. So you got to be a buyer when price is correct, and then at the same time have a exit strategy in place. We're looking at Tata Steel, for example. I think the key parameters are the closure of the UK blast furnace, which is the TS UK business. They're setting up more capacity, including one at Kalinganagar. Good bit of deleverage has happened over the last 2-3 years. The debt reduction is down. So bit of financial leverage also will play out. So tactically looking at that, we also have Mukand in our portfolio, where Bajaj is now the majority owner with almost 74% share. We expect more fund infusion and maybe some land sale more to deleverage the company more. They got the Jindal Stainless guy as the CEO now. It's a very small business currently at about 2,500 crore market cap. I think this has potential to be a larger player in specialty steels and alloy steels. So we're looking at, as I said, tactically here. It doesn't figure in the core part of the book.
We haven't had the chance to talk about the rough week that was last one. What is it that you're making of the shake-off that we are coming out of, both in the mid and the small cap space, especially in particular?
So, that's the nature of the beast, on this space. If you've seen 70% return 1 year in the index alone in small cap and about 55-58% in the mid cap, it was looking for triggers. So the multiple triggers came in. One was the news on some operators fueling few stocks. Then was the stress test for mutual funds. Most MF funds would have rotated some of the liquid holdings and raised cash as well. So I think it was looking for reasons, but that's how it is. You can lose 10, 15, 20% in a matter of few trading sessions and gain that also. My sense is they might be, from a flows perspective, out of favor for some time, maybe in lead up to the elections, as SEBI is raised concerns and red flags on some fraud building up, especially small and micro caps. And liquidity might chase more large caps and large liquid mid caps in the near term. But that's only a small factor in my view. So a lot of quality names have also come down because the entire space has fallen. So you can do some bit of bottom fishing in that space, in railway names, in defense names, in some of the auto ancillary names. There have been very good corrections there. But be a little more patient. It may not just come up the way you're used to seeing it last year.
Okay. Be patient, that's the word there. But let's go across to Sharad actually, who's standing by to tell us what is the dealing room chatter this afternoon. Sharad, what's the buzz today?
The buzz is shopper stop, as what we are having conversation with the dealers over here. There has been sustained buying coming from the domestic institutions, preferably one mutual fund house as well. Now, importantly, if you look at the volumes, that has picked up almost 3 times its 20-day average. And interestingly, 4 lakh shares have been bought over the last 2 trading sessions. Now, this translates to roughly 0.4% stake. And the interest has been strong when it comes to mutual fund houses and certain HNI counters as well. Now, the key DIs already invested in the company, having exposure of more than almost 3% stake each, include the names of ABSL Mutual Fund, HDFC Mutual Fund, as well as Nippon Mutual Fund. Apart from this, also the recent triggers was announced by the company was the Dockers arrangement that is expected to be value accretive as per the analysts, and also the company has been meeting FIs and DIs over the last 2 weeks as well. So institutional interest is also coming because of these roadshows as well. But importantly, 4 lakh shares have been acquired by a domestic fund house over the last 2 trading sessions.
Thank you so much for that, Sharad. Shopping going on in Shopper Stop, but will there be shopping in Page Industries, Kunal, or something like a Trend which has already seen a run-up? Even when other Tata stocks were falling, Trend was managing to hold on to gains. If you talk about the retail basket, how is it looking like? And overall, page also today we had UBS which initiated coverage, good recovery. But today, given that the weakness in the market, we're not seeing much of a move in Page Industries.
Yeah, it's not fallen as much as compared to many of the other peers. ABFRL, for example, has fallen quite sharply. You've seen Shoppers Stop, etc. have gone through their own phases of correction. So I think that's maybe a sign that the stock is a lot more resilient for itself, especially over the last, I think, 1 month to 2 months. Now, from the entire space, I would believe ABFRL, if someone is looking out for a buy, then I think 225 approximately is a breakout point for the stock, and only about those levels is where one should look to add on to the name trend. I think if in case the stock provides any kind of a significant correction or any kind of a dip, would come back towards a good support point. I think at current levels, the risk reward is not in favor to initiate a fresh buy on the stock at current zone.
Okay, that's trend for you. 4074 is where that stock is. Gurmeet, wanted to understand what your portfolio strategy has been last month or so far this month itself. And are you tactically moving or gravitating more towards large cap if that wasn't already the case?
Selectively, yes. Wherever I think there is, I think the financials have been a little out of favor, especially NBFCs post RBI, going strong. First on small ticket personal loans, then on cash disbursement in gold financing, then IPO financing, and so I think some of the quality names have fallen. Today, you just mentioned about Arvind Kapil joining Poonawalla. Arvind is a big name in working capital and unsecured mortgage in HDFC, and now obviously was spearheading a lot of initiatives post merger. That's a good addition there. So we're looking at some names in home finance like Home First, Poonawalla, Chola, even Bajaj Finance. I think there's been a 50% EPS growth and stock is down 20-25%. So some and adding banks. I think once the liquidity eases, the rate cut cycle turns, I think financials will come back. Also, the treasury gains will support near-term compression in NIMs. Adding some chemical names, as I discussed with you, being slightly counter-cyclical. We added some IT also. Typically, when there is a bit of a turmoil, market tends to be a little defensive towards IT, FMCG, pharma names. And I was speaking to a few headhunters. The hiring is coming back in IT. Early trends. I don't want to draw a conclusion. So selectively looking at IT names and doing bottom fishing there as well.
Right. Gurmeet, also, I want to get in your view in terms of overall, what do you think about the real estate sector now, right? We had seen all these names really buzzing in trade for some time, but in the last couple of weeks, a bit of a subduedness, maybe we could say, is coming in, not that much of a run-up. So, is it time to just wait now to enter into realty sector, whether you want to talk about DLF, Godrej Properties? What's your view there?
Again, got to be more selective, but yeah, I agree with you. It's been a sharp runner in this space, and the sector was out of favor for a long, long time. I think DLF in particular, I think the balance sheet is completely deleveraged. We are also looking at the rental portfolio getting monetized through one of the REITs coming in. The higher end, they probably will beat this year guidance as well with the launch in both ultra luxury as well as the mid affluent segment. So the balance sheet is shaping up well. So that is something we look at any day, obviously, is welcome. My sense is that once the rate cut starts, once mortgage yield slightly eases, I think that's when probably the bigger move will come because the lower end housing hasn't really participated. So if you want to go for mass builders and retail builders, I think it will take a little more time. Till then, you can probably look at something like DLF or Lodha and select maybe few selective names down south.
Okay, sure. We'll keep an eye out on that. And Naresh, any view that you have on the realty names as well? Anything that is looking attractive in the real estate space?
So in the real estate space, we have two names which have not done well as such. One is Mahindra Life Spaces and one is Sensex Realty. These are two names which have gone sideways for multiple years now. So that is the only space where risk reward is still left, because if you look at every other name, we've gone 100% up in a lot of names. The largest name like DLF is up 100% over the last 6-8 months. So in this case, these are two names which are sideways, available at the same prices where it was a few years back. So these are the places where risk reward could be good, and eventually over the next 3, 6, 12 months could be a good upside.
Right, okay. In the meantime, here's another ET Now exclusive, and we're learning from reliable sources that PSU owners of Hindustan Urvarak Rasayan have made a case to the government to ensure their investment in HURL are compensated by the new owner, that's HURL disinvestment. In fact, my colleague Prakash Priyadarshi joins in with quick details on the same. Prakash?
Yes, we are learning from our sources that despite giving in principle approval to the disinvestment of HURL, various PSUs have raised profitability issue before the government. HURL is a joint venture company among the various PSUs like NTPC, IOCL, CIL, HFCL and FCIL. Now these companies have raised issue related to profitability and the recovery of their actual land cost. It is important to know that HURL was incorporated as a joint venture company by these PSUs with an estimated investment of around rupees 25,000 crore. Companies like NTPC, IOCL and CIL have requested government to ensure better return on their investment they have made in HURL. Along with that, two other companies coming from fertilizer sector which are part of this joint venture like HFCL and FCIL, they have requested government to ensure recovery of actual land cost before the disinvestment of HURL. These companies have provided lands at a very nominal cost to the HURL for recovery of their fertilizer plants. Now, these companies want government to ensure a recovery of actual land cost, which is around rupees 30,000 crore from the company acquiring HURL. We are also given to understand that the government will prepare a fresh proposal for disinvestment of HURL and that will be finalized after a new government sworn in.
Right, okay. Prakash, we'll leave it at that. Thanks as always for those exclusive details. In the meantime, Gurmeet, just wanted your last take in. What's the overall view on the PSU pack? More steam left, and let me leave defense and railways out of that because, you know, that's already gone through its fair share of profit taking and what have you. But the rest of the gamut.
No, as I said, I think some PSUs we are seeing structural changes, including disciplined capital allocation, a bit of change in culture. Obviously, it's a long process. So we are dipping into some PSU bank names, something like SBI and Bank of Baroda. There's been a very healthy correction in some railway names like Titagarh, etc. So we're looking there as well. And I think the defense opportunity is huge. I remember Prime Minister talking of next 5 years being very big for defense exports. So I think there you have to focus more on the size of the opportunity and not just get carried away by the recent run-up. Some of the names in energy spaces like Power Grid, still 13, 14 times earnings, 51% stake already of the government, so no overhang of more supply coming in. So looking at some of the PSU names and now adding them on price corrections.
And that price correction has indeed taken place also. But Gurmeet, good to have you on the show as always. Before I hand it over to Vinny and find out how the day-to-day has panned out, let me get in some BTST trades as well going. Kunal, what's on your list?
So I'll go with metal stocks as a buy, two buys on that front. First one's on sale. The stock looking attractive, above 125 plus mark where the stock is trading right now. So 131 is a target. Stop loss at 121. And Jindal Steel is something which is giving a breakout above 800 levels. So buy with a target of 830 and stop loss at 790.
Right. Naresh, what about your BTST ideas?
So one metal name again here, that would be a buy on JSW Steel, which has given a reversal sharply after almost what looked like a breakdown. So target price of 820 plus, stop loss at 794. Second is a buy on Maruti, setting up for a breakout into new all-time highs. Stop loss at 11,500, target price of 11,800.
Okay. Well, let's begin winding up for the day and let me take it across to Vinny to find out what the closing rates are looking like. Vinny?
So absolutely, given that, we started a bit of a subduedness in the middle of the day today, as of now, at the end of the day, managing to close on with gains of 0.1% in trade only. 22,000 is what the Nifty 50 is managing to hold on to. We have seen the Sensex 2 gaining almost 100 points in trade today as well. So let's pull up the charts of Sensex. 117 points, it's managing to close on with gains of that, around up of 0.1% in trade as well. Nifty Bank, yes, that's the one also saw a good gain as well. We had HDFC Bank at one point of time that actually saw very, very sharp recovery coming in. And as of now, when you look at it, Nifty Bank also almost near the day's highest point. HDFC Bank recovered considerably from the day's lowest point and managing to close a slight bit lower than the highest point of the day. Mid and small cap, that continues to see pressure today as well, and underperformance coming in from the broader markets as well. Nifty mid cap down 0.3%, while the small cap is seeing sharper cuts of almost 0.6% a trade by the end of the day as well. Not much of a recovery that one actually saw in the small cap and the broader markets. Large cap was something that was actually seeing good gains. So let's pull up Reliance Industries. That saw a very good recovery. We have Tata Steel, JSW Steel, all these names that are actually managing to hold on to very good gains in the Nifty 50 as well. So interesting to watch out for these names. Other than that, we have M&M in the auto pack, which managed to hold on to good gains today, as well as Tata Motors and Bajaj Auto from the auto sector managing to hold on to good gains. Also, we had the metal pack that is buzzing in trade today. The top sectoral gainer was Nifty Metals. So yes, JSW Steel, Tata Steel, JSPL, all these buzzing in trade. And we did see iron ore prices that actually saw a bit of a decline coming in. We saw a considerable decline of almost 7-month low for the iron ore prices, and that is why the steel pack was.
If you like this video, then like, share and subscribe to ET Now.